Hey, it's Tom. So I was thinking recently, dangerous, I know. With Tesla stock price dropping below $1,000 again, is Tesla actually expensive? Real simply put, if you're one of those value investors you see on YouTube that won't buy stock unless it's under 20 PE using the 12-month earnings and very conservative growth expectations, then yes, stop watching now. Tesla is expensive looking backwards. But if you have a few brain cells, look forward to what realistic growth rates Tesla are suggesting and delivering. Spoiler, I think Tesla are actually sandbagging this as well. Then let's check it out. First, let's look at what the consensus is for Q4 earnings per share, which you can find on Yahoo Finance among other sources that are out there. Wall Street are expecting $2.26 for this quarter, which has increased from $1.92 when earnings were announced on the 2nd of January. So up 18% since then, since the announcement. Let's annualise that, so times it by 4. That gives us a $9.04 EPS, earnings per share. If we divide the current share price, as of recording, $944, that works out to be a PE of 104. So 944 divided by $9.04. Is a PE of 100, or more specifically 104, expensive? Well, if the company's growing at 10% a year, then yes, it would be considered expensive, even in my books. But if, like Tesla, management are guiding at 50% or more a year. Let's add another layer to this. Based on my numbers, and many others, the earnings per share for Q4 is going to be way above Wall Street's expectations of that $2.26. I think it's going to be closer to $2.70. If we annualise that, it gives us an earning per share of $10.80. Let's apply that 104 price to earnings that the market is currently giving Tesla. You'd end up at $1,123 at the earnings date this coming week. That is just a point of time, and the market is a forward-looking vehicle and Tesla is growing. Let's take my 2022 earnings per share for all 4 quarters, which adds up to $16.85. Let's apply that 104 PE that the market's currently giving Tesla. And by the end of 2022, I personally am justifying a share price of $1,752. If we apply a reduced PE of only, let's say, 75, not the 100 or the 104, which would be, to me, absurdly low considering the growth prospects of Tesla as a company, that would work out to be $1,264 per share. The way I look at it is, in 2023, Tesla will have around $28 in earnings per share. My number's not Wall Street's. And they'll still be growing earnings at somewhere in the region of 50% per year. For reference, I believe in 2024, Tesla will have in the region of $40 per share. If you say that you're willing to pay 50 times those earnings as a minimum, that would mean a share price of $1,400. Discount that back by 2 years at, 15%, let's say, which is an acceptable return for most, then right now, you and I should be okay with paying just over $1,000 per share for Tesla. Considering the current share price is closer to $950, buy now could yield 17% compound annual growth rate over the next 2 years. I personally don't think that's bad considering, on average, just buying the S&P 500 yields in the region of 10 to 12% a year. Just remember, none of this is financial advice, it's just what I'm doing and my numbers. If you're willing to pay more than 50 times earning, as you value and realise that the 50% growth rate isn't just for the next 2 years, it could potentially be for the next 5, 10, 15 years, considering the energy business, the AI business, and all those other business units that Tesla are working on. Using 75 times 2023 earnings of $28, meaning a share price of $2,100 at the end of 2023. That is a 32% growth rate for the next 2 years from the current share price of around $950 at this time of recording. In summary, Tesla is overvalued if you look and use the trailing 12-month PE. But just remember, the stock market is a forward-looking vehicle, And if you look at the projected earnings per share for this quarter, which will be reported on the 26th of January, and the outlook for Tesla in 2022, I think people are being naive and very short term, not factoring in the growth that Tesla will have over the next few years, or what I believe they will have. Yes, the macro events in the market are compressing growth stock PEs down. But at some point in the next few months, the market has to be sensible and a little bit rational, and money will move to those companies that are growing earnings and allocating capital effectively. I genuinely believe that the consensus earnings per share will increase dramatically from what they are for the next 2 years, quarter after quarter, when Tesla continues to execute and deliver better than expected. I hope this video has been informative. If it has, subscribe to my channel and like the video. But until next time, stay safe.